Very good. We've done it a little bit symmetrically. We go dark, dark, white, and then dark, dark. So that's very nice and aesthetically pleasing. So just to begin with, let's just get a quick introduction from all of you. Christoph, perhaps we'll start with you at the end there. If you just tell us about yourself and what it is that Iwoca does, and then we'll move down the line this way. You've got, let's give you a minute, minute and a half.
Great, thank you. That's very generous to give me a minute and a half. Great to be here today. My name is Chris. I'm the CEO and founder of Iwoca. I've started the company 7 years ago, and I've been with Goldman Sachs 7 years prior to that. And you will hear from my German accent that I am from Germany. I've been in London for 13 years and felt that London was the place to be in finance. I still think London is the place to be, although there are some serious challenges that London has as a financial service hub. The reason why I started Iwoca was that I saw a challenge in financing for small businesses, and we set out with a mission to finance 1 million small businesses and really pioneer in using technology to improve underwriting, to reduce cost of serve, and therefore unblocking this large structural problem that we face. Today, we have financed more than 25,000 businesses. Our core markets are the UK and Germany. We're about 250 people and all headquartered in London.
Christian.
Yeah, good afternoon, everyone. So I'm Christian Faes, co-founder and CEO of a business called LendInvest. We're a marketplace platform for mortgage lending in the UK. We set up the business 10 years ago, initially focused on the niche area of short-term mortgages, so bridging finance. We moved into development finance and then most recently into buy-to-let, so a more mainstream investment mortgage product. So we lend from 1 month through to 30 years in duration and sort of target what we describe as property entrepreneurs. On the investor side, we have sort of a very wide universe of investors, from retail investors through to sort of large institutions like Citibank and Nomura. And in terms of numbers, we've lent historically about £1.7 billion, and to give you a sort of a feel for our growth rate, we're on a sort of run rate at the moment to be lending about £1 billion a year currently. So growing pretty aggressively, and importantly, from our perspective, we're a profitable business as well. So we've been growing sort of 50 to 100% year on year, and we've been been profitable the last 4 or 5 years.
Don't tell us too much, Christian. Well, you'll use up all my questions. Let's come to Sergio.
I'll try to do that. So my name is Sergio Furio. I'm the founder of Creditas, which is the leading secure lending platform in Brazil. I'm originally Spanish. I realized in 2012 that there were better things to do than trying to minimize the spreads in the developed world, and decided to do the adventure of trying to refinance customers that today are paying up to 200% for a personal loan. And what we do basically is we use the cars and the houses of the population to create a collateralized loan at a much cheaper rate than what the customers are actually paying. From the funding perspective, we securitize our loans, and we distribute them both through institutional investors and retail.
Okay, Olivier.
Olivier, CEO and founder at October Lending Marketplace, dedicated to small and medium-sized enterprises. We are based in Europe, continental Europe, with operation in France, Spain, in Italy, and very recently in the Netherlands. We have originated so far roughly 250 million euros, and also we match SMEs and both retail investors and institutional investors.
Okay, so very quickly, how much have you raised?
On the lending side, 250.
On the equity side?
On the equity side, 51 million euros.
And valuation?
Valuation undisclosed.
Ballpark above 100 million?
Above, yes,
above,
you're right.
Okay. Sergio, how much have you raised? What's the valuation?
We raised $85 million. We're actually currently raising. The last round was in December 17th, and undisclosed amount, but normal standards.
Okay, and what was the last reported valuation? How about that?
There is not a reporting valuation.
It's a big mystery. Okay, Christian.
Yeah, we're about the same on the valuation. So we've raised about £70 million of equity, and I think we raised 30 million last year in a Series C. I think it was too cheap.
Christoph.
We've raised around £60 in equity and have a few hundred million in debt.
I think that's £60 million, right?
Yes.
Sorry, I think you said £60. I thought that was particularly low.
Yeah, we raised more than our personal seed investment.
Okay,
of
great.
£60.
I mean, in terms of profitability, I think, Christian, you've already told us you're profitable. Christoph?
We've been profitable last year, subject to year-end adjustments that I don't know yet. But yeah, we've been profitable too.
Sergio?
Yeah, we expect not to be profitable in the next, let's say, like a year.
So after 1 year, you
It's to be proud about it, right? It's to be proud about it, not to be profitable.
Right, of course.
So I think
means you're growing.
and just to get into topics, I think that one thing that is really relevant in lending, I think, is to get to understand the accounting and also, the unit economics on the product and whether you're profitable with the product that you actually do or not. So we are profitable in the individual product, not profitable as a company.
Okay, and Olivier?
Obviously, if you raise 51 million euros, you're not profitable. Otherwise, you're just stupid. So definitely, we're investing a lot. 4 years, 4 countries. So being profitable is not in our current target.
Okay. Now we had David Velez from Nubank yesterday, so we're talking a bit about Brazil and how you've obviously been suffering the worst recession in a century, right? And I'm just wondering, what is the state of your market, which is Brazil right now? If you're just kind of emerging from this recession, is business still able to grow despite what's going on, or do you find actually it's a great opportunity for you because you're helping them save money effectively on the credit they would otherwise get?
So I was one of the typical foreigners that moved to Brazil back in 2012 because Brazil was in the economy's cover with like a ramping economy and everything was going fine. And then a year later, everything collapsed. And yeah, we have been like in a recession for 4 years probably, going down more than 10% in GDP. And I think that's like in reality, that's the perfect combination of having like a country that is inefficient, big volumes, and at the same time in recession, because in those moments is when the banks are actually hitting the brakes. They don't want to lend anymore. They don't want to be aggressive. And you can find like plenty of customers that are looking for better rates. So we benefited from that. Also, our product is counter-cyclical. We are using collateral. So typically, when investors want to invest in asset classes, they tend to have like a view on, what is a flight to quality in those moments, and ours was a flight to quality. So now looking forward, with the political turmoil almost over, I would say that there's like a lot of untapped investment opportunities in Brazil, and I think that we're going to be looking into the best 3 years of the last century or something.
Okay, and Christian, I mean, of course, we've had credit crunch in the UK, and I think that's kind of around that time you started.
It's a political turmoil as well.
Well, right now, but what I mean is when you first kind of came onto the scene,
Yep.
again, you were able to take advantage of kind of a negative kind of economic outlook.
Yeah, I think that's right. And that short-term mortgage space that we were focused on was totally disrupted. So they typically had one bank funder that the operators were relying on, and then coming to the crisis, their banks pulled their funding and largely went out of business. But it wasn't due to the sort of credit quality of their loan books. It was just the way they were set up. So I think through those times definitely come opportunities, and that's been how we've set up our business, is sort of really been focused on having a really diverse funding base, because we think that we're a property lender, so we're conscious that it's cyclical in terms of the asset class that we lend against, but hopefully we've built a really resilient business to push through any cycle.
And Christoph, again, I mean, part of the problem is that SMEs, small and medium-sized businesses, just can't get the money, even if they are decent businesses. So again, I think you kind of came on the scene or into your own, also being able to take advantage of when banks were kind of retrenching, right?
Yes, absolutely. It's a real nightmare for small business to get access to financing. If you haven't been trading for nearly a decade and been profitable for a number of years, it's really hard for them. And financing is really the bottleneck for lots of small businesses to trade and prosper. We have been approving in the last quarters more than 4,000 SMEs for finance, and that's roughly 10% of the entire market. So you can see a small company like ours within a few years getting to these numbers really does show how big the lack of supply in the market is for financing to small businesses.
And Olivier, in your markets as well, I mean, Europe's been growing, but I suppose there are concerns now that might kind of tail off. Have you been able to, has it been a question of taking advantage of the opportunity of banks retrenching because of a negative economic outlook, or just a kind of new business model that managed to kind of find some new market?
Honestly, I think we are at a very special moment, meaning that, when you're running a marketplace, you have to solve a chicken and eggs problem, meaning you need to find both lenders and borrowers at the same time. Currently, for sure, my view is that in continental Europe, and especially in France, the risk is not well priced, meaning rates are definitely too low in continental Europe, and it's too easy, so meaning it's too easy to attract lenders. I guess it will change. Valuation are too high. You are mentioning a startup valuation. Of course, they are too high. Real estate is too high. A lot of asset classes are too high, so mispriced. So I guess it will change, and we expect that during this year, we will see a change, meaning our offer will be more interesting for borrowers. So it means it will be easier to attract SMEs. On the other side, I guess it will become more difficult to attract lenders, especially retail lenders or insurance lenders.
Is that something you're expecting as well, Christian? I mean, we're obviously having some interesting things going on in the UK right now with the political situation. House prices have been dropping, especially in kind of London and other areas that came up quite a lot. Is that something that's liable to negatively impact your business?
I mean, obviously, if house prices fell considerably, that would impact our business. On the short-term book, most of our loans are kind of 6 to 8 months in duration, so I think the market has to fall pretty quickly in a really heavy way for any capital losses to be an issue. But yeah, obviously with Brexit and all the rest of it, there is a lot of uncertainty. But there's also been a lot of government incentives around house building and allowing people to access a mortgage in a more easy way. So there's kind of some government subsidy in there that is keeping a bit of liquidity. So the average house buyer across the country is still buying property and is not too affected by Brexit.
I think I also just saw the other day they're reintroducing 100% mortgages. So you can buy a place with no deposit. So we look forward to seeing how that works out.
We've seen that before.
Because it worked out so well last time. Christophe, again, the economic situation in some of your core markets, not great. Are you kind of battening down the hatches a little bit, getting a bit more concerned, or again you see this great opportunity because other banks are going to be retrenching now?
I think we're still at the sort of beginning of our journey, and therefore I would see it as an opportunity. I think what every company needs to make sure, in particularly in times that are more uncertain, that they're well capitalized, and particularly if they hold credit risk on their books. And we're certainly better capitalized than any bank in Europe. Our leverage ratio is significantly lower. And we have refinancing facilities that are many years out. So I'm very comfortable that we're really well positioned to go through any uncertainty and hopefully come out stronger.
And Sergio, I guess you've kind of been the most, you've lived through the most stressful times out of these, out of the rest of this panel. So on the one hand, you might think the only way is up, but also you've got a new government which, for all of its faults and criticisms, is seen to be quite pro-business.
Yeah, I think that's a.
I would say that the alternative.
Yeah, I would say that the alternative was so terrible that everyone is happy just because we got the less terrible alternative. So I think that now, as I was saying before, everyone is like ready to push the accelerator and start like growing. So definitely this is going to be like a great for business. And I think one thing that is really relevant is even though the political situation was sort of like chaotic, the regulators were extremely pro-innovation, and that was like a good thing for all the fintech industry in reality.
Okay, we touched on it just a little bit. I want to talk about bad loans, because I don't know if those of you in the audience here today were here yesterday when we had Rieche, the founder and CEO of Oak North, and I was quite taken aback by the answer, and I think some other people were as well, that I asked him, what's the bad loan rate? And he just kind of went 0. So never ever had a single default, not a pound in default. And I said, what about late payments? Not a pound in late payments. How does Iwoca compare, Christophe?
So our approach obviously would be fundamentally different to the typical bank's approach, and the type of customers that Oak North is lending to. These are large, medium-sized businesses that they're giving often multi-million-pound loans to, so it's a completely different segment to the one that we are serving. Our USP is really to understand what the risk is of a customer that comes to us. And when I say risk, what the default risk of that customer, which typically for small business is not 0. And therefore, the only way for us to really develop that expertise and that USP is to have defaults, because we can only learn from the defaults and train our models that way. And sadly, I do have to say that our default rate is bigger than 0, but that's sort of the obvious part of our business. I think typically banks would have default rates that are in the low single-digit area, so 2-3% per year. They're typically charging anywhere around 10% per year, and we would certainly be higher than that, but still in the single digits.
And your interest rates in general are a little bit higher, is that fair to say? Or about the same?
Our interest rates would be about the same for customers that would have similar risk to the banks, and they would be higher for the customers that have higher risk, as we have to charge for the risk that our customers have, and able to give them funding in a sustainable way.
Okay. And Christian?
No. No, I mean, I can't comment on other people's businesses, but I guess from our perspective, we kind of feel if you're not having any losses, then you're kind of not lending right. And certainly, you know, I think it's part of the core sort of skill set of our business in some respects. So in the early years, we did have loans that went bad, and we had to sort of build up a skill set around working out mortgages that go wrong. And so I think that's a core competency of our business, and we've gone on to build technology that helps us manage our loan book in a really efficient way, and we think we've got a superior performance through that. We did a retail bond on the London Stock Exchange in 2017, and it was sort of, we'd said for some time that we'd never had a capital loss to that date, and the auditors went through and actually verified that. So we have certainly written off interest payments, but we haven't had capital losses, or we certainly hadn't at that stage, as we've grown pretty dramatically over the last couple of years. So we do have losses. To give you a straight answer, it's like less than 1%, and that's interest, not capital.
Okay, and how does that compare with mortgages?
Exceptionally well, particularly for the areas in the mortgage market that we operate. So in that sort of short-term mortgage space, It can be sort of high single digits for our competitors. But again, it's an unregulated market, so there's no sort of publicly available information to really benchmark that.
And Sergio, because I guess yours are, obviously your loans are secured against the properties,
Yep.
and your loans are secured against property and also cars as well. What's your kind of default rate, your kind of late payment rate? Is it any higher than one would expect from banks in an economy like Brazil?
No, not really. So so first context, in Brazil, average NPLs are roughly 3%, 3.2%. In our products, very different. Home equity, very close to zero. So I think that the late number that we had is 0.11%, so extremely low. Remember that our home equity loans have like a loan to value of 30%, which means that we have like a triple collateral on the money that we lend to the customer. When I turned to auto, we had priced the loans to have losses of 3.5%. That was the pricing. That was the losses that were embedded in the pricing. We are now seeing the mature cohorts going more to 1.7, 1.8, and current losses of the portfolio 0.44. This is like an official number.
Just because I think securing a loan against a vehicle is a relatively alien concept in Europe, I would imagine. If someone writes off the vehicle, I presume the insurer has. How does it work? If they write off the vehicle, does the loan come due, and also you have depreciation of a vehicle, whereas property usually goes up?
Yeah. So people in general, they tend to think that real estate is much more secure investment from a lender perspective. In reality, the problem of a real estate property is that it's much less liquid than a car. A property is a property. A real estate is like an apartment, different than a house. It depends on the region. The car, you can move it from one place to the other, right? So in reality, the liquidity of the car industry tends to be higher. We don't require insurance for auto loans. We do require it for home equity loans, but not for auto. That means that if the customer loses the car, we are not going to recover anything. In reality, what happens is that it's very easy for you to find where the car is in general. So we see like only 5% of the customers that actually defaulted, we didn't find the car. So we don't see like any need of actually requiring the insurance. Then the other component is in a car refinancing, the average maturity is 42 months. And we don't do new cars. It's always like a used car. The depreciation of a used car is typically like 10% per year, roughly. So in reality, you are increasing the equity portion of your loan every month.
Okay. And Olivier, in terms of bad loans, late payments?
Yeah, first of all, saying zero default, zero late payment, I'm more than surprised by such a statement, honestly. We could all add, I guess, that we have also fraud on top of late payment and default. So we could have a full panel on this specific subject. But it's not your question anyway. So I think that if there's such a statement, two possibilities for me. First, He's lying.
Well, let's not. I don't think we should even be suggesting that. I certainly wasn't suggesting that as well.
Just, I guess they miss a lot of opportunities, meaning they could originate definitely more than they do. My guess. I will say the second. The second answer is the right one. Concerning ourselves, I think that the right way to look at default is to give a look at the difference between gross yield and net yield, net of defaults. So gross yield is roughly 6.5%, net yield, net of default, roughly 5%. And as we are granting amortizing loans, meaning when we say 5, it's really cash on cash. So it's a real return. You have the cash in your pocket. So it means something.
Okay, but I mean, in terms of like compared with unsecured loans from banks or other lenders, how do you, as a platform, compare?
If bank could be more transparent, I could answer. Honestly, banks are not so transparent on their default, but I think we compare pretty well.
Okay. You will do slightly different things. We've got SME lending in Europe. We've got property lending in the UK. We've got consumer lending, secured consumer lending in Brazil, and yes, P2P lending here in Europe as well. You're all set up as alternative lenders, so you've got that much in common. How are each of you, just tell me as briefly as you can, better than the banks? Let's start with you, Olivier.
Yeah, we think we try to be better first on the customer journey first. We think that we, even on credit scoring, I think we have more tools at our disposal to take better credit decisions, but we are not better than banks when it's about rate. Of course, banks are definitely more aggressive in terms of pricing than we are. Just for a very simple thing, they have the trust of the lenders, let's say. And we have everything to prove. So far, we have no track record. So meaning you have banks with very low rate, but a more difficult journey for sure for the borrowers. And we have a very good journey, but we have no trust so far. So I don't know when we will meet, if we will be quicker or if banks will be quicker. But that's the game. Yeah, that's the real challenge.
Okay, just a reminder to switch your phones off or put them on silent, please. But when you say that the customer journey is better, you mean they'll get their loans faster, it'll be more efficient, you'll be more responsive to customer queries and
exactly.
Kind of better customer service.
Everything online, no need to sign a piece of bunch of papers and everything.
And Sergio?
So we do have very unique product categories. In reality, we're almost like market makers from that perspective. I think that the big differential is investing heavily in the technology and creating our own platform. I'm just going to give an example. A home equity loan in Brazil, one of the biggest problems is that you don't have title insurance in Brazil. So in the US, a mortgage lender would just go and get like a title insurance, would pay like a couple of $1,000, and then that's it. We don't have that option in Brazil. So that means that we need to underwrite internally a title insurance to make sure that if the customer doesn't pay, we can repossess the property. So what we have done is we have built a technology that basically allows you to do that efficiently at scale. And we think that it's not about user experience or things like that. I think that those things can be copied. The most important thing is how to become a low-cost producer in the long term. That's the name of the game.
So it's about technology?
It's technology. Yes.
Okay, Christian?
Yeah, we're very much the same. So whilst we operate currently very much in the specialist space, if we look at the whole sort of mortgage landscape in the UK, I mean, it is dominated by the banks, and I think the benchmark is set particularly low. So you do have high street banks advertising on TV and online mortgage, but it's really not much more than an online booking form to go into a branch to fill out paperwork and go through what is on average a 3-month process. So it's a hugely frustrating consumer experience. With us, we use technology to make it a much better experience for the borrower and the intermediary, so the specialist market's very intermediated, but also to drive core efficiencies through our business. So, like I say, a run rate at the moment about $1 billion a year, and growing quite aggressively, and we do that with 170 people in the business. And so, technologies are really driving real efficiencies, and we think we'll be able to sort of, lend multiple billions with sort of like maybe, 15, 20% increase in headcount in the years ahead.
Okay, and Christoph, you were telling me something astounding about the fastest the time it took someone to get a loan once from your platform?
Was in 3 minutes, which is, I think, the fastest ever been processed in the world, pretty much. So how are we better to the banks? Well, first of all, we are serving small businesses and they don't. That's a fairly fundamental sort of improvement from a customer experience perspective. The second is a customer that is coming to us typically gets a credit decision within a few minutes of starting the process. From a convenience perspective, that's hugely different than eventually browsing a little bit on the website of a bank and then being deferred to a call center for the next 45 minutes until they may or may not speak to someone. At that point, they might already have the funds in their account. We've really kind of taken the processing and the technology that you need to process end-to-end an end-to-end transaction from starting it to triggering an automated funding to a level that the banks don't. The third one, which I think becomes really interesting in the future, which is sort of a big sort of step of as a next step in our journey, is to bring the financing to the customer when and where they want it. So I think in 5 years' time, most of the SMEs will not necessarily go to a bank when they're looking for financing or come to our website for that matter. They will be going to places that they're already operating on. That might be cloud accountancy software systems, that might be the vendor where they are buying from, that might be an aggregator. And we have built an API infrastructure that enables all of these different parties to dock on to our platform and send us the applications from their customers to us, and we then process that automatically, give a decision back, and in some cases, the platform can entirely transact that transaction on their platform, and a customer would never touch our platform. That's a completely different level in distribution than banks are currently offering in SME space. They're doing it to some extent, but not very well in the consumer space. But I think we are certainly by far the pioneer in bringing financing to businesses where and when they really want and need it.
And I just want to, I'll come to you just a second. Just very quickly, can you actually pinpoint the data? What's been your impact on the real economy? I mean, like, how many businesses have you helped, get financing that would have otherwise gone out of business if you hadn't provided them loans? Can you actually determine I'm going to ask you all this question, kind of what your kind of impact has been on the real economy?
So we funded more than 25,000 businesses, which in many cases wouldn't have had access to any financing. And I think that sort of created an enormous amount of opportunity for them. Arguably some of them might have gone out of business if they would not have had any financing from us. We haven't run a big economic study, which you typically do once you prepare for an IPO. We haven't done that yet, but I'd be interested to
when are you planning to do that?
Some analysis. You'll be the first person that I'll let know.
I want to come to Olivier now.
No, I just would like to mention that I really fully agree with you, meaning both partnerships with vendors and thanks to technology, we will be able to sign such partnership and to be really where the customer or the borrowers decide, which is definitely for sure the key. The guy wants to buy tires and he will get the loan with his tires. That will be the future for sure. Fully agree. And of course, it will take time. It will take time to evangelize SMEs because they are so used to go and discuss with the bankers when they need money instead of discussing with us today or discussing tomorrow with the vendors. I think we have a huge evangelization, education to do.
And how many businesses have you helped raising funds that perhaps they might otherwise not have?
Roughly 500, but we have a very high average loan, so meaning 500,000 euros, and we go up to 5 million euros. So that's why we're not able to process a loan within 3 minutes. It lasts 2 days for us, but it's even 2 days, it's dramatically more efficient than the traditional banking system. As you mentioned, almost the same thing for an SME. It goes from 1 month to 3 months. So that's definitely night and day for borrowers.
And Sergio, a number of people you've kind of helped buy homes who perhaps otherwise wouldn't have been able to?
We don't help them buying homes. We help them refinancing expensive debt. 20,000 customers, a couple of $100 million in active portfolio, and saved for them like $150 million.
And Christian?
So we estimate that we've helped build over 7,000 new homes in the UK. And in terms of the borrowers that we lend to, I'm not sure that they wouldn't get funding elsewhere. So I think the sort of credit quality that we're lending to, they probably could get finance somewhere else, perhaps from a bank. Just the reality is it would be much slower. So like I say, the average time to get a mortgage is 3 months. Dealing with a development finance lender from a high street, we've heard people waiting up to 6 months. They've got builders on site halfway through building a house and they're waiting for their high street bank to provide the drawdown. So I think we just provide a much more efficient product for that type of borrower and then sort of unlocks liquidity in the market and just sort of helps the economy in that way.
Okay, so I next want to kind of take a step back a little bit and look at the kind of more global economy. We've been talking a lot about this here. Of course, we had Christine Lagarde here yesterday as well. We had the IMF downgrading their growth forecasts earlier this month. I suppose Christian and Olivier and Christophe, you've also got the likes of Brexit to contend with as well. What impact is the possibility of a recession and Brexit likely to have on your business, Christophe? Nice simple one, but you've got 1 minute.
I wouldn't give a prediction. Recession is going to happen eventually. It's just a question of time. We're well prepared for one. That's sort of important. That's under my control. I don't see a change in behavior in our customers, neither on the way how they're taking credit and the demand for it, nor in the way how they're repaying us. So I don't see any specific signs in neither region that we're operating in. Germany, in ways, in recession, we haven't seen any impact on our loss rates.
Okay, Christian?
So I think, as you mentioned before, we built our business out of the back of the last crisis, which was kind of a difficult time to be starting a business, but I think it gave us a really good foundation and focused our mind in terms of what is possible. We're very conscious that the cycle will come to an end at some stage. Again, it's about building resilience around the business, so diversifying our funding base as much as possible, hiring in people who are really experienced with this stuff, so all of our credit underwriting team, very experienced with different cycles and so on. And I actually think, whilst you never wish for it, post the next crisis, I think our businesses will be far more valuable, because I think that's kind of the one lingering doubt that some people have is like, well, you've never dealt with a crisis. It's like, yeah, but everyone in our credit team has, and it's kind of like far sounder, or better lending than what perhaps was being done previously. So I think we know it's coming, and we just prepare for it and keep building our business.
Yeah, I can't remember who it was on our neobank panel yesterday, but one of the panelists was saying, wipeout's just great because it's going to kind of shake out, it's going to separate the wheat from the chaff, and we're going to be on the side of the wheat. So
it's good as long as we're still here. Yeah.
Sergio, I guess you're hoping that recession actually comes to an end and things start growing. And
recessions are great. I think that for entrepreneurship, they are great actually. I think from a market sizing perspective, when you're small, they don't have an impact on you. You're just trying to get from a 0.0 something to 0.0 something, so it's going to be okay. From a borrower's quality perspective, in our case, we have the collateral that really reduces the volatility a lot. I think that the biggest impact is on the funding side, right? So I think that a global turmoil, and this could be like a Brexit, China, whatever thing that we can think about, that really constrains liquidity of the system, and that could mean like less money to invest in loans and to the securitizations, or higher price that we would need to pay to them, and also in our trading multiples. So I guess that if a recession comes, in general, VCs and PEs and everyone else is going to be willing to pay less for our businesses, I guess.
Olivier?
So regarding Brexit, we are not really concerned, as we really want to operate in continental Europe since day one. Regarding the recession, I think, honestly, it's an opportunity for us. An opportunity because we'll have less liquidity meaning that it will be easier to convince entrepreneurs to diversify their financing. So it will make our life easier, and our portfolio, honestly, so far is not as big as it will be very challenging to deal with non-performing loans. So I think it's an opportunity, even if, as you mentioned, it will be more complex maybe for ourselves to raise money in equity, but that's also the reason why we raised 32 million euros in June last year, just to make sure that we still have 32 million euros on our balance sheet to let's say, to deal maybe with a more gloomy future.
Okay, now, as we know, given the name of the panel, alternative lending, financing the real economy, you're all alternative lenders. Do you see any rationale for perhaps collaborating or joining forces with one of these digital banks that are mainly focusing on kind of the current accounts and credit cards and things like that? I guess an obvious partner for you might be our friend David Vélez from yesterday from Nubank. There are other options in France, whether it's across Europe like N26. And obviously in the UK, there's plenty operating there, Starling Bank, Revolut, Monzo, and likewise for you, Christophe. So, and whoever wants to come in on this first, welcome to do so. Any rationale for joining forces with one of these neobanks?
I mean, I'm not sure about specifically the neobanks. I mean, I think clearly banks are quite important to a business like ours. They're a big buyer of the loans that we originate. In terms of us becoming a bank, I think that's something we've thought a lot about, and very happy with the decision not to be. The only reason you want to become a bank is to get cheaper capital, and I think as we've scaled our business, our funding is kind of getting to the point where it's cheaper than what it would be if we were a small bank in terms of the cost of deposits. So I think, and also just the compliance and overhead and all the rest of it, I think it fundamentally changes the DNA of your business. And so if we were to become a bank, I feel like that would just be giving up in some respects. And I just, we're definitely not ready to do that.
So if we come back next year or the year after and you join up with a bank, we'll play you back
pull out
that
the clip, but it's not going to happen.
Sergio.
Yeah, so I think a different perspective from our side. We got approved a financial institution license. It allows us not to take deposits, but to originate the loans. And probably the next step is going to be to get a mortgage license, which allows us to take deposits from the customer. So that's our route. So we do think that there's like competitive advantage in actually becoming a regulated entity, and that's what we decided to do. In terms of like partnering with the banks, both digital neobanks or not neobanks, I would say definitely yes. I think that the banks have lost a ton of competitive advantage, branches and credit modeling and so on, but they still have like one which is enormous, and besides the access to capital, obviously, which is having like a platform of customers. Customers still are in the banks. So why don't we focus on creating a process that is so efficient that even the banks want to work with us, so that we can combine a customer platform of a bank and a monoliner with a very efficient process to originate a loan?
Have you had any conversations with banks
Definitely,
about
yes.
this already? Olivier?
Yeah, completely.
And by the way, just to be clear, not as a combination of companies, right? So not a competitive movement, just partnerships.
Right. Olivier?
Yeah, definitely. We already mentioned it. Partnerships are definitely the key, and we can once again do it thanks to the technology. It's quite easy to plug and to add new channels of origination. We have already done it. We have done it, for example, in Spain with Liberbank. It's a small, medium bank in Spain, and definitely it's quite efficient and quite easy to deal with them and to serve more SMEs thanks to this partnership. So for sure, it will be a key trend for the coming years.
So no plans at present to go down the Zopa route and become a bank, get a banking license?
No plan at all. We'll check next year, but no plan.
Christophe?
So we do work very closely with the neobank, and that is tight, and they are offering our product to all of their members in a completely white-labeled way through their platform. So the 3-minute loan that we were talking about was actually on the Tide platform. It wasn't even one of our customers that's going through this. And it's been a massive success, and has shown that if you offer a small business a good product overall, there is a lot of demand for finance, and because it was so well delivered, there was also a huge amount of people who were interested and signed up for it. And the question for us is, why wouldn't we want to be that front end? Because in the end, we're providing a product to millions of small businesses, establishing this relationship very early when they're starting their business or as they grow, and being closer to them than we currently are is certainly a huge benefit. As a credit company, you have as little engagement with your customers as it can get, but you also make all of the revenues within the product offering, while sort of these companies make zero revenues and have all of the engagement. So clearly, sort of something doesn't gel. And so I think that's going to be really exciting in the next few years to see whether there will be more tie-ups, whether there will be mergers, acquisitions, or just companies like us maybe building it organically.
So long term, any plans to get a kind of banking license? Do you think that's inevitable eventually? Just very briefly.
So I think you don't need to have a banking license to serve a customer well.
Okay.
And so I think that's a separate decision whether you want to have a banking license. For someone like us that is building up a huge balance sheet, certainly having deposit funding is a stable funding source, possibly at a lower cost, although that's sort of questionable. And I would really sort of distinguish between the need for a banking license to raise deposits versus the ability to serve a customer, business or not, with a fantastic functionality and the intelligence that that you can get by looking at transactions, bank transactions, and offering other services in a much better way than is currently done.
All right, so we've got 30 seconds left. I know I asked you a little bit about fundraising before, but whether you're back here in 1 year or in 5 years' time, do you expect to perhaps be a public company, like to have had an IPO by then? Olivier?
Sounds like a good plan.
Good plan?
Yeah.
Yep.
Yeah.
Yep.
Great plan.
Excellent. So You heard it here first. All these alternative lenders are planning IPOs at some point, or expect that to happen. Anyway, just to say as well, for the startups that won the awards this morning, Christoph over there on the end, I think you won one of the awards last year, didn't you?
We did.
So you too, if you win an award, can be up here on stage the following year. So I just want to thank once again all our panelists here, Christoph Rieche, Christian Faes, Sergio Furio, and Olivier Goy. Thank you.